Red alert. This is very scary because it's only happened 3 times in 30 years. And we have a $6.4 trillion stock wipeout. NVIDIA delays their new chipset, and stocks are not happy today. They're all getting crushed, which basically means the market is not happy right now. Yeah, I would agree. Volatility is up by over 130%, and we're back here into extreme fear. This is a stock market crash, in case that's not clear. We've now had the biggest drop going all the way back to 2022, and the Nikkei is down by 17%. It went down more than 10% today alone. I'm not going to bore you with the reasons why that went down. It's basically the carry trade. You're probably not going to understand, so we'll just push forward. The S&P is resting on key support, which is going to give us a really key area to defend, along with the Nasdaq here on the weekly chart. And Bill Gross is saying, don't buy the dip because Warren Buffett's is hinting at a sell signal. We saw that. He sold $75.5 billion worth of stock in the second quarter. Yes, I understand he didn't sell on Friday. I don't know why people seem to get confused with that. But now, shifting gears here to what was supposed to be working, going back to August 4th, the stock market is rotating. The question is where it's going to go next. Tumbling yields have investors turning to utilities and REITs. Well, that worked for about a hot minute. Utilities were green at the open, and they faded all the way down nicely to red into the close. We can also note that we're on the brink of a correction. The current drawdown is currently 9.71%, when on average, when the S&P goes down by more than 5%, the average decline is 11.8%. So is this it? Well, as we look here to Palantir, which is providing a bit of a lift for stocks in after hours on the AI trade, I don't know. I think we have to look at charts a little bit later in the show. So right now, if you have a scowl on your face, you don't know what to do, stay tuned because I'm going to walk you through what I am doing right now. So let's have a look here. Right now, the market is pricing in a 99% chance of 50 basis points in September, 87 for another 50 in November, 86 for another 25 in December, and then 83 for a 1 in January, which basically means the Fed is a little bit late to the party here. Jerome Powell is likely going to reluctantly do this. I don't think there's going to be an emergency meeting, but this is definitely where yields have to go. I'm going to leave you with a little bit of optimism at the end of the show, and at the end of the show too. So a lot of people are talking about Warren Buffett right now, but just read this quote. The S&P is down 7.5%. Scratch that out and say 9. But if you're worried, you probably shouldn't own stocks. So I'm going to try to give a little bit of a balanced view today. Stocks are clearly red, but let me tell you what's important for me for the bulls and for the bears. Let's look at a 4-hour chart. Why? It's looking a lot different. Yes, because most of the losses came at the open. And then into the afternoon, we started to stabilize. We're not green, so it's not like I'm saying that we're going to infinity and beyond, but at least for now, we're stabilizing from the first 4 hours into the last 4 hours, which basically means don't sell into panic. That's what extreme fear is. You don't sell into extreme fear. So Warren Buffett did not sell on Friday. He sold into the second quarter after he's already sold a lot of stock in the first quarter too. Bank of America, Apple. So make this actionable for me because I really don't know what to do. And this is exactly what it looked like today. All right, let's go. So I mentioned these two charts. That's what I want to focus on right now, the S&P and the NASDAQ. Just before we go further, though, I'm going to ask you for a huge, huge favor. If you could please consider smashing that thumbs up or subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. So if we look here, I've now gone back and revised my charts because I got to find out where support is. So as I look here, I note that we have a nice little uptrend with these 3 lows, and that's almost exactly where we opened today. If we zoom in a little bit closer, and I'll make it easier to see with full candles, what does it look like? Well, it looks like a gap down pump up. We know the gap downs are for buying, and at least for today, it did move higher. Here's the concern. If we stall out here and leave a gap on the chart and fail to reclaim this area, that's a head and shoulders. We'll likely be looking for a move back down to the 50, if not lower. So what does this mean? Make it simple for me. Well, if this is the bottom and we're going to go higher from here and not sideways, I'm still not convinced. I'm not convinced we're going to go higher from here immediately. We're nearly into correction territory. We've started filling gaps, and we have to just see where we're going to go from here. But if we think about what this means, it basically means that we now have a clear area to defend. The bulls need to defend this low. Otherwise, we're at risk of going into that correction. Do I have the image right here? 9.71. So we're within a whisker of going into a correction. If a correction happens, it's not going to be good. It means the Fed is likely making another mistake we're likely going to have our head and shoulders, and we're likely going to go down. We already know that by looking here to our monthly chart. But because the market's moving so fast, I don't think people really want to wait to see the close of this candle to get the warning. We talked about it on Thursday and on Friday. We have to now wait until the close of the month. That seems like an eternity in this market. Then we got to wait for the close of September. Whoa. I don't think people are going to wait. So getting the warning is one thing, making a plan is another. If you have not already made a move, what I would really encourage you to do is to think about whether you're going to be scared if we go lower or if you're going to have FOMO if we go higher, and try to split the difference because that's all you can do. If we print a weekly lower low, I'm getting more evidence we're bearish. Now let's look at the NASDAQ because this one's more important. The first thing I want to focus on here is just hiding everything and looking at the blue line, 421.3. What's our low? 423.45. We're within $2 of actually testing that 50 MA. If we lose that, the next support's down here at 350. I'm not going to pretend like that's a good thing. If we're bearish, let's be mindful of it. Why? I notice that same pattern here. Head and shoulders, knees and toes. So if we're going to go lower, I can see it here. We got a gap down, pump up. Didn't quite get to a gap fill, but I would say it's close enough. So now, if we know we have to also defend this low, we do not have a lot of wiggle room. If we lose this thing, there's no more uptrend. That's it. We have to go all the way back to this low here, right? Something like that. I'm not going to draw it just for the sake of time. Just know support is not found right here. We're probably looking for a crash back down to 405 if we print a weekly lower low. That's pretty simple, isn't it? So let's go through this news again and see if we can have a little bit more of a tilt in terms of what we are actually seeing, because if we look here to the dollar, what happened? The dollar actually broke down. Yields are going down. The VIX is rocketing higher. So let's go back through these and we'll look at a few more charts at the very end. I hope you're following along though. Yeah, stocks got crushed. We're right on support. I don't like selling on support. We should have sold when we got the warning, or we got to have the wherewithal to look for more evidence now, which means waiting for weekly and monthly candle closes. NVIDIA is going to report earnings. Let's see what they have to say. Stocks are being punished ahead of time. So like I said, I think that was the gap down. If people are forced to sell at the open or into a margin call to close, because the market did have a little bit of whippiness here, right? Look at that. Down, up, down. Why? It's probably some margin calls. This is a terrible day. It's one of the worst days I've personally seen other than 2020. So if we go here to the VIX, I just want to point this out too. So if we go here to the VIX, when I say this has only happened 3 times in 30 years, what this means is that we got above 55. 55 is a very elevated level. Anything above 20 starts to get high. Over 30 is elevated. 40 is stretched. 50 is extreme. And 60 is really extreme. Ask yourself this. Does today feel like 2008? Or does today feel like 2020? Global lockdowns, financial crisis? If it is, hey, be scared. Wait for the feedback. Print those weekly lows and weekly and monthly lower lows, and you're probably going to do okay. If you're a bull, though, this is likely it. Maybe 1 or 2 months like we had in 2000, also here in 2020. But remember, the Fed actually talks on August 22nd, if not earlier, and then we're going to get a Fed decision on September 18th. So what does that mean? This basically perfectly aligns. If you cannot wait until the end of September, you need to manage your risk now by either looking at shorter timeframes or by just raising some cash so you're not losing sleep. You should not be losing sleep with your positions. Your stocks are supposed to work for you. And if they're not working for you, you need to reassess. Volatility is on the rise. The market's moving really fast. All right. What was the other thing I want to show? I think it was QQQ. QQQ on the weekly. So this is like one of the most important charts for me. If we go lower here, it means the AI trade is getting unwound. The AI bubble is bursting. It's bursted, not just bursting. My apologies. And there's lots of knives everywhere. Yeah, Tom Lee is out there pumping again today. People are calling for emergency meetings. I don't want to do that. I want to try to stay level-headed. So as we look forward into the afternoon, if we've stabilized and we're getting a lift from Palantir, is it going to hold into overnight trading? Because the Nikkei got crushed, right? On the one day, it did bounce back, but like, do you even notice it? Nope. Down more, close at the low. Downside pressure, probably going to get follow through tomorrow. All right, and one day it's down that much. So now we understand what the S&P and the NASDAQ are doing. Yes, we heard about this over the weekend. That's why we got the massive gap down today, in addition to what happened in Japan. The carry trade is a little bit complicated, so if you guys are interested, drop me a comment or show up for the stream tomorrow. Buffett's managing risk. It's a smart thing to do. You do it before you need to. You do it when you're able to. Yes, everything's getting crushed right now, right? The Russell got crushed. Utilities are getting crushed. People are selling first and asking questions later. It's basically like the $6 trillion we see in money market funds. Well, Warren Buffett did the same thing. He's raising some cash. But here's what's really interesting. Everyone's talking about the pure number of dollars that he's raised, but I was listening to an interview today, and the percent of the Berkshire portfolio currently in cash is at about 25%, which is a historical norm. Part of what got scary is that he had to trim so much Apple, frankly, because it's just so huge. So if we look here to his actual holdings, it's now currently 30% of his portfolio. I would argue is still pretty bullish. Before this, though, it was over 50. He cut 10% in the first quarter, and now he sold half of what was left over. So he's just being prudent. It's a huge chunk of his portfolio. But keep things in perspective, because if you're quoting Warren Buffett, and here he is on May 3rd in 2024, he said you should not be a puss, right? Don't wuss out. Why? If stocks going down scares you, stocks are going to go down over the course of you buying. So what do? Either don't look at the quote or be prepared. That's what it basically means. If someone came and knocked on your door after you just bought it for, say, I don't know, like a nice $1 million, nice round number. Someone comes and knocks on your door and says, hey, I'm going to offer you 900,000. What's your first thought? Oh my God, is my house only worth 900,000? Yes, that's called a quote. It's called an offer. You can choose to not accept it. You know the value of your stocks. And what's really important is that when we're taking the staircase up and the elevator down and people are selling indiscriminately, you need to know why you own stocks. You need to know what your high conviction trades are. Warren Buffett didn't sell everything. Looks like he's being prudent. So let's just finish off by looking at the news here. Let's close that one out. Close it out. Yeah, you're probably not very happy. First world problems. Your stocks are down, right? Could be way worse. Perspective is important. VIX is way up. If we go back over 60, hey, something's going really wrong. That's all I know. We're into extreme fear. We saw VIX going over 60 only 3 times in 30 years. The worst day since 2022. Utilities getting crushed. We're on the brink of a correction, which means we just watch for those weekly lower lows. Palantir might be a savior. Let's refresh it. Yeah, it's back down to 12. Is it going to hold into tomorrow? Hey, tune in with me on the stream. You'll find out. So stop being a sourpuss and start to think about what you want to do from here. Do you want to raise some cash? Do you want to maybe not trade anymore? I'm sure some people quit trading stocks today. That's not for me. I want to keep at this. And as I see things stabilize, I'm feeling cautiously optimistic. All right, that's it for today's video. So if you want to hang out with me tomorrow at 9:15 a.m., you can click on the video on the right. If not, click on the video on the left to see what we did this morning. Thank you very much, and good luck out there.